What if I told you that one of America's closest allies, Japan, is quietly selling off US dollars? This isn't just about money. This is about power, strategy, and a silent message to the world. Why is Japan doing this now, and what could it mean for you? What if we're entering a new era of economic power plays, one that could affect every global citizen? After World War II, Japan rebuilt its economy with massive U.S. support. American capital, technology, and political protection helped Japan rise from ashes. To maintain competitiveness, Japan began accumulating U.S. dollars, keeping the yen weak to fuel export-driven growth. Japanese cars, electronics, and machinery dominated global markets. The U.S. gained a loyal partner in Asia, while Japan enjoyed economic prosperity. But beneath the surface, a quiet imbalance was growing, one that's now reaching a critical point. Japan is the largest holder of U.S. Treasury securities after the Federal Reserve, with over $1.2 trillion in foreign exchange reserves, most in U.S. dollars. For decades, this was seen as a symbol of trust. But trust can erode. Concentration risk is real. When one currency dominates your reserves, you're vulnerable to geopolitical shifts, inflation, and interest rate policies outside your control. The yen has plunged to a 30-year low. A weak yen means Japan pays more for essentials: oil, gas, food, all imported. Inflation, once a non-issue in Japan, is now a major concern. U.S. interest rates are high, luring investors away from yen to dollars. Japan's aging population is feeling the pressure. The government can't raise rates aggressively due to its massive debt, so they intervene by selling U.S. dollars and buying yen to prop up their currency. Japan isn't acting in isolation. Around the world, countries are shifting away from dollar dependence. China uses yuan for oil trades. India and Russia use their local currencies. Even the EU has discussed strengthening the euro's global role. Japan is closely watching. If it clings solely to dollars, it may miss the pivot. Diversification is no longer a theory. It's a necessity. Japan's public debt exceeds 260% of its GDP, the highest in the developed world. Servicing this debt is becoming harder as inflation rises and the yen weakens. Selling dollar reserves helps ease short-term pressures, but it's not a cure. It's a symptom of deeper economic strain and a warning signal for other nations reliant on foreign reserves. Every time Japan offloads a large amount of U.S. dollars, global financial markets react. Bond yields fluctuate. Currency markets experience volatility. Other central banks reassess their reserve strategies. Japan's moves are like tremors before a quake. They warn of structural shifts. Financial analysts believe Japan isn't panicking. It's planning. It may increase gold holdings, purchase euro-denominated assets, or even explore digital currencies. Tokyo might promote more trade in yen within Asia. The aim? Reduce vulnerability and build strategic flexibility. This could redefine Japan's role in global finance. If trends continue, Japan could sell another $200 to $300 billion in U.S. assets over the next year. This could hasten the global shift away from dollar dominance. While not immediate, the move signals a potential rebalancing, where power is no longer tied to a single currency. The future may belong to a multipolar monetary system. Japan's dollar sell-off is a chess move, not a panic. It's a strategic pivot in a changing world. To stay ahead of these transformations in global economics, subscribe and turn on notifications. We'll help you decode money, power, and the future.